Good morning. Welcome to our regular second Saturday webinar. We will start the presentation now. Nifty is almost near to its all-time high, but the consolidation in Nifty continues. Whereas the real action in the last 1 month was seen in the broader markets. There were plenty of stocks went up by 20%, 30%. Some of the stocks even went up by 50%. Some stocks like Nucleus Software went up by even 100% in last 1 month. So there is hectic activity happening in broader market, though the Nifty large cap index still continues to see in consolidation. There is some fundamental positive news are emerging. One of the biggest news is that the energy prices continue to fall. Basically, there are three energy products. One is the crude oil, the second one is the natural gas, and third one is the coal. Crude oil prices now around $70. In addition to current prices, India gets additional benefit of importing from Russia, where they are giving further discounts. Natural gas prices are almost at pre-COVID levels, and it is very positive for our country because natural gases are used in various manufacturing places. For example, in fertilizer manufacturing, in ceramic tiles manufacturing, natural gases are used. So the fall in natural gas prices is very positive. Then the coal prices also fell very sharply, but still above pre-COVID levels. Coal prices basically are used for generating thermal power as well as in manufacturing companies like in cement. It is used. So overall, the fall in energy prices are positive, and a rate hike cycle is behind us. At least as far as domestic rate interest rates are concerned, we are at the peak. From here on, interest rates are unlikely to go up, whereas there is a possibility of interest rate fall at the end of current calendar year, or first quarter of next calendar year. There is a possibility. If you take in US, there are still some expectation that US Fed will hike interest rates next month. Next week, there is an US Fed meeting is there. Expectation is that in current month, they will not hike interest rates. Whereas next month, there is a possibility of 25 basis point hike in US Fed rate hike. In previous week, Australia has hiked the interest rate, as well as Canada has hiked the interest rate. It is a surprise interest rate hike. Whereas in India, if you see that, it is clear that we are at the peak. From here on, either interest rate will stay at this level for some more months, and then it will start falling, and it will not go up from here. Due to broader market performance, most of the portfolios has done well in the last 1 month, and most of the stocks in the portfolio has gone up very sharply, and overall portfolio has outperformed indices. So Nifty and the Sensex, if you see, it is up by almost 1% in the last 1 month between last second Saturday meeting and current second Saturday meeting. And Nifty mid cap and small cap, if you see that, it is up by 5 and 6% in the last 1 month. So mid and small cap has heavily outperformed large cap indices. There is a huge momentum in the broader market. As I told previously, there are plenty of stocks going up, and some stocks has seen going up by 50 to 100% in the last 1 month. Though there is no exact reason why suddenly mid and small caps are going up. Some selectively, some stocks, some results of mid caps were good. Other than that, there is a lot of momentum is there in the market. In this momentum, lot of stocks were going up due to speculative reason also. Foreign portfolio investors who were selling in the last two financial year, they have been buying continuously from April and May. They have bought nearly 7 billion worth of shares. For the last 1 week, either they are marginal sellers or marginal buying, almost flat for the last 1 week. But in April and May, they were heavy buyers. Also, the macro data coming from our country is positive. One is the GDP data. It surprised positively on the upside. It beaten most of the estimates, and the GDP growth was very good for Q4. Similarly, inflation also coming down. So these are some of the positive macro data. And as I said previously, the fall in energy prices is very positive because it will reduce inflation. In spite of so much of movement in the market, retail participation is still subdued, though it has picked up a lot when compared to previous months. That is from January to March. April was better. Then May was further better than April. In the June first 10 days, it is still better. Retail participation is going up, but still it is not on a very higher side. Just it is going up. There is no big euphoria among retail investors in spite of mid and small caps doing very well. So from here on, what will happen is that if market does well, means most probably churning will happen, where more retail participation will start coming in. Due to sharp up move in the market, we have to be very careful because though some stocks are going up because of good results and some fundamental news, lot of stocks are going up due to speculative action, and mid and small caps, many stocks are seeing euphoric move. Some stocks have gone up by even 100%. For example, one of the stocks we used to recommend previously, Nucleus Software, from 600 just 1 month back, and it was trading 400 3 months back. Now it has gone to 1200 levels, 100% up in the last 1 month, and almost 200% up in the last 3 months. Because of there was some fundamental news that company results were good. They were charging higher prices to the customers, which showed the revenue and profitability higher, and that has moved the stock very sharply in the last 3 months. There were some fundamental news. Some stocks were going up purely based on stories, and we have to be very careful in that because we have seen in IEX the same thing happened 2 years back in stocks like IEX and Lotus, where lot of stories were told, only positives were narrated at that time. The stock went up very sharply, but risk factors when happened, the stocks fell very, very sharply. The same thing is now happening in many mid-cap stocks, especially if you see in defense themes, mainly in mid and small cap. Lot of stocks were going up. There are a lot of risk in this. Right now, no one is talking about the risk. Stocks are going up. Sometimes what used to happen is company used to get an order of 200, 300 crores. Its market cap goes up by 500, 600 crores. Like that, it is happening. 2 days back, one power company, Torrent Power, signed an MOU with one state government. The stock price went up very, very sharply. Actually, it will take many years for them to implement the project. But what happened was that the stock price immediately started discounting as if the project has been implemented and company started getting profit. Like that, many themes, a lot of stories were told to justify high valuation. So we have to be very careful in that because right now, what is the new normal in the last 1 to 2 years is that whenever the uptrend happens, it used to be very sharp. Similarly, whenever the downtrend happens in a stock, it is also equally more sharp. So if we get on a wrong footing, means then we will get trapped, and it is very difficult to get out from that. So always do a basic due diligence before buying, because once the stock starts falling, means then we may not be able to get out from it. The classic example is the IEX, where many retail investors got trapped between 200 to 300 rupees. The risk factor played out, whereas the positive factor did not play out in the IEX. The same thing can happen in many stocks which are going up very sharply. So we have to do basic due diligence. And traders should keep stop loss. And for fundamental investors and long-term investors, some basic due diligence should be done. Otherwise, it will be very easy to get trapped in this market. If we get trapped, means what will happen is that there will be a lot of other opportunities, but we could not be able to buy it because we will get trapped in one stock and we may be waiting for it. Cash will get locked into that and we cannot be able to come out and we will miss the opportunity cost also. So always do basic due diligence. On broader market and on large cap indices, if you see market consolidation is continuing, but what we feel is that the consolidation is likely to end and Nifty may break the all-time high of 18,800 levels in coming days. It is almost 19 months since the consolidation has started. It has started in October 2021. Now we are in June 2023. Almost 19 months has passed. Still, Nifty is on the unable to break the October 2021 high, and we expect that market consolidation will end and all-time high will be made in coming months. FII flows, as I said previously, FII flows has been very strong, and in the FY 22 and FY 23 there were sellers of 18 and around 5 billion respectively, whereas in the first 2 months of current financial year, April, May and June first week, if you take almost 7.6 billion worth of investment have come from foreign portfolio investors. So that is one reason why market is holding on and it is going up very sharply. Previously, what was happening was that FIs were selling, whereas domestic institutions were buying. Now both FIs and domestic institutions were buying, and that is why market has gone up very sharply and sentiment has changed completely. On macro data, as I told you previously, that macro data, domestic macro data which are coming out are positive. The Q4 GDP data which came 10 days back, that is on March last day, it came at 6.1%. The expectation was around 5%. It's a very sharp beat on upside, and most of the economists were surprised on the very positive Q4 GDP data. And overall for the full year, India has done reasonably well, and it is expected that in current financial year FY 24, GDP data will be good. There is a possibility of some caution emerging among economists that due to weak monsoon, there may be due to expected weak monsoon, there may be a 0.25% drop in GDP data. That is what the expectation is for current financial year FY 24. If El Nino plays out and it spoils the monsoon mist, there may be a marginal drop in GDP data against previously expected. But still, among globally, if you see, India will show a decent growth. This is the energy price chart. Crude oil, we already know that it went to more than $120. It is now around $74, $75. The other thing which we don't track very closely is the coal and natural gas prices. If you see the coal prices, pre-COVID level, it was trading around $50 to $100 per ton, whereas it went up to $450 per ton. It went during the post-COVID time due to a sharp drop in production. The price went up very sharply, but now the fall is also equally sharp. Now it is around $130 per ton. It is now trading, though it is still higher than $100 pre-COVID. From the high, it has come down very sharply. It is expected that coal price will come to pre-COVID levels very soon. So India used to import coal for thermal power generation. They import it. In spite of India being the largest producer of coal, we still import coal because in our country, the coal we produce are of inferior quality. Lot of energy content is less. Similarly, lot of ash will be formed from domestic coal. Whereas on imported coal, the calorific value is higher and ash formation also less. So the manufacturing companies like cement and all, they buy both domestic coal as well as the imported coal, and they will boil their clean for heating the cements, and price has come down sharply and it will benefit them, because right now what is happening in cement sector is that they are not having pricing power. They could not be able to hike the price because the capacity is much higher than the demand. So the only way for them to generate profit is that if raw material prices comes down, then they will have some margin cushion. Other than cement, some thermal plants also are using imported coal. The other major energy which has come down is the natural gas. From the peak of more than $9 per MMBTU, the price has come down to $2 per MMBTU. So India basically imports a lot of natural gas through long-term contract, as well as through spot. Also, India buys it, and Petronet basically buys through long-term contract from Oman. The Petronet used to from Qatar they used to buy lot of natural gas, and similarly through spot also many companies used to buy it. And because of shortfall in natural gas prices, it will benefit most of the industries. If you take the ceramic tile industry, they basically use natural gas because of the cost is very less when compared to other conventional fuel. So they basically use two energies. One is the natural gas, other is the propane. So sometimes what used to happen is that natural gas prices will be higher than propane, and they shift to propane. And when natural gases prices are lower than propane, then they will shift to gas. So they alternately change the fuel between natural gas and propane. The fall in natural gas price is positive for fertilizer sector also, because most of the fertilizer companies use natural gas as a fuel, and it will benefit them also. Also for transportation, if you take big cities like Delhi, one of the major fuel used is the natural gas for transportation, and it will help them because the price has already started coming down in New Delhi. If you take crude oil, one biggest apart from price fall, the one biggest advantage our country is having is that we started importing crude oil from Russia post Ukraine war. Previously, pre-Ukraine period, if you see that India used to import just 1% of our crude oil needs from Russia. One reason why we did not import much crude oil from Russia at that point of time is that the transportation charge is very high, because the transportation mode is through ship, and it has to travel a lot of distance to get in India. And the quality of Russian crude also is not suitable for our domestic refineries. So, but once India started importing post Ukraine Russia war, many domestic refineries were modified so that they could be able to process the Russian crude. And apart from that, Russia is giving a lot of discount for importing, because European countries almost stopped importing from Russia due to the sanctions. And most of the crude oil which previously used to go to European countries, now it is coming to India. And if you see that from 1%, it gradually went up to 5%, 10%, 15%, 20%, like that. It was on an upward trajectory. For the month of May, India imported nearly 42% of our total crude oil import in the month of May. When you compare to pre-Ukraine Russia war period, it was just 1%. So from 1%, India's crude oil import from Russia has gone to 42%. And if you see the price also, now the price is around $74, $75 for a normal Brent crude, whereas the Russia, they are giving almost a 30% discount to our country. And if you see that now the Russian crude is working around and less than $60 only. So that is one big positive. And there is a talk that government may soon cut petrol and diesel prices, because the oil marketing companies, HPCL, BPCL, they have already started making huge amount of profit. And they were making huge losses 2 years back when crude oil price went up to $120, $130. After the crude oil price fall and import from Russia going up, the oil marketing companies are making huge profit. Already they made up the losses which they were incurred 2 years back. So there is a very good possibility that the fuel prices will be cut in coming months. Maybe in the July or August 15th, we may see petrol and diesel prices coming down very sharply. And one important thing is that India buys crude oil from Russia, and they are not settling through US dollars because of sanctions. India is also not settling through rupee also, but India is settling through settling these Russian oil imports through UAE dirham. That currency only India is using to settle the payment for Russian oil imports. GST collection, it almost 12% up consistently, and if you see that the tax collection, basically it used to show up almost in line with the GDP growth. And if you take our GDP growth, it is growing around 6 to 7%, and inflation is 5 to 6%. So around 12 to 13% nominal GDP growth is there. And if you see the tax collection, exactly the tax collection will move in line with the nominal GDP growth. And if you see in the month of May, from 1,40,000 crores, the tax GST collection has gone to 1,57,000 crores. And we expect that in coming months also the GST tax collection will grow around 12 to 13%, which will be mostly in line with the a nominal GDP growth, that is real GDP growth plus inflation. And if you keep aside GST tax collection, if you see the other tax collection, that is corporate tax plus income tax and other excise duty and all, if you see that it is also moving in line with the real GDP growth. And if you see between FY22 and FY23, it has gone around 11 to 12%, from 27 lakh crore. It has gone to 30.5 lakh crore, and it is perfectly in line with the budget estimates. And we feel that in coming years also the tax collection will move in line with the projected figure during the budget. The twin deficit, which used to be a big problem, even though now the fiscal deficit on the higher side due to COVID. And it's not only in India, throughout the world, the fiscal deficit is extremely high because of COVID. Most of the governments gave stimulus to the economy, and that is why the fiscal deficit is high. But India is also on the higher side. But now we feel that from here on, the fiscal deficit will start coming in. As far as current account deficit is concerned, if you see that even though the current account deficit is higher, for the last 1 quarter onwards, the current account deficit started falling very sharply. One reason for that is that our service exports is doing exceedingly well, though the mercantile exports are not that much positive. The service export is doing very well, and which has helped in reducing the current account deficit. It is almost to zero levels. The last if you see in the last 1 month, if you see that many foreign brokerages has come out with a very positive report on India, especially on the macro economy. They have come out with the report. One institution, which is the Morgan Stanley, they have released a very deeply researched presentation on India. And what they have put in so many slides that they have put in a lot of slides in that presentation, showing how India has changed in the last 10 years, in the last decade, how India has changed. And what they are expecting is that in the next 10 years, India will do very well, and which is almost equal to how China did between 2007 and 11. They have compared, and they have put in a lot of charts, and they have made a lot of projections in that. And if you see that one of the slides which I have taken in this presentation, between 2007 and 2011, Chinese GDP growth went up from 3.5 trillion to 7.5 trillion. Almost in the 4 years, Chinese GDP growth has more than doubled. The similar way they are expecting that India's GDP will double, not in 4 years, but in next 9 years, India's GDP will double. That is what their expectation is. Now in 2022, the India's GDP size was 3.3 trillion. What they are expecting is that by 2031, India's GDP size will be 7.7 trillion. So more than double India's GDP size will grow in the next 10 years. That is what Morgan Stanley expectation is. And they are comparing with the GDP growth China witnessed during previous years. And they are expecting that the same type of growth will happen in India also. What they are saying is that both manufacturing as well as service will do well in the next 1 decade. That is what their expectation is. And they have told that India's service is doing very well. And if you see the light gray color line, which is the service growth, where India market share has been continuously going up. If you see in 2011, that is 10 to years back, 1 decade back, India service percentage among global world services export share was just 3.2%. Now that has gone to almost 4.9%, and they are expecting that it will go up very sharply in coming years also. And India's service exports is growing much faster than goods exports. Whereas if you see the goods exports from 1.7% market share, it has gone to just to 1.8. So the market share for merchandise exports hasn't gone up much, whereas for service exports, it has done very well. From 1.6, from 3.8, it has gone to 4.9 in services, whereas for merchandise, from 1.6, it has gone to 1.9. The other important thing what they are telling, Morgan Stanley is telling, is that India's beta, that is the volatility in Indian market, has come down very sharply. That is what their reading is. And what they are telling is that they are comparing 1 year rolling beta between MSCI India versus MSCI emerging market. And they are saying is that it has come less than 1, which means that MSCI emerging market, suppose if it falls by 1%, means then MSCI India will fall by 0.6%, 0.6 only. And the Indian market has become low beta when compared to previous years. And when you see that in 2010 to 14, the beta level was much higher, more than 1, 1.3, 1.4 like that. And the main reason why at the time our beta was very high was that whenever the foreign institution selling happens, Indian market used to fall very sharply, because at that time there was no major SIP flows and mutual fund was not well established. Now if you see that every month we are getting almost 14,000 crores through SIP flows, and that has reduced the Indian volatility, and moreover more retail investors has directly entered the Indian market. And because of that reason, even the FII is selling. In spite of FII selling the last 2 years, our market did not fall much, and our market has become less volatility when compared to 1 decade back. Between 2011 and 14 period, India was extremely volatile. Now that volatility has come down thanks to domestic flows. As I said, the SIP flows has been continuously going up. Now, if you see that it has now touched 14,000 crores per month, and which is positive because it gives a big stability to our market. When a foreign institution sells, then immediately domestic mutual funds will start buying it, and it will give big stability in our market. Stability is very important because what generally as a human tendency he does is that whenever market falls very sharply, most of them get panic and they will sell further. That used to happen previously. But because of SIP flows, the stability is there, and which has made people not much worry on the volatility in the market. Q4 results almost over. Q4 results and full year results. And important reading I have made in the Q4 results is that the raw material inflation, which was very high in the last 2 years, has started coming down very sharply, and it is positive for many companies, and it has already started showing in many companies margin going up. There were a lot of positive surprises. Companies like if you take a company which nobody watches, for example, Nilkamal Plastics, they have shown very good margin improvement. The main reason is the raw material prices have started coming down. But the positive trend has already started, and we expect the full impact of lower raw material prices will be seen in coming quarters. And in the results, what we can see is that there were pockets of positive surprise in many mid and small cap stocks. And one segment which has deeply disappointed is the agri-chemicals, where many companies like United Phosphorus, Aztec, Rallis, like that, the entire agri-chemical companies, they did very badly due to very high inventory and lower prices. And that segment has disappointed. And apart from agri-chemicals, many nominal chemical companies, their performance also very subdued. For example, recently listed companies like Rosari Biotech, then you have company like Neogen Chemicals, and if you Lakshmi Organics, these companies results also not up to the mark. Our expectation is that if you leave aside specialty chemical companies, the basic chemical manufacturing companies, their results will be subdued in coming quarters also. That is what our expectation is. And if you see that the results, when you see that among Nifty companies, almost 26 company results were above expected, whereas 14 company missed the expectation and 9 came in line with the expectation. Among Nifty next 50, 21 were in line, 19 company missed, and 3 came out with neutral. Among mid-cap companies, 45 companies came better than expected results, and 39 company missed and 6 companies were neutral. So if you compare all these companies, almost 50% of companies came better than expected. The balanced company results were either neutral or they have missed it. So it's a mixed bag result season, we can say. So monsoon. One trend which has been emerging is that this time after almost 3 years of very good, 4 years actually, 4 years of very good monsoon, it is expected that this year monsoon may see some disappointment. Many forecasters, majority of weather forecasters expect that monsoon rain to be lesser this year due to El Nino. So historically, if you see that most of the El Nino years, monsoon has done very badly, which is the heating of the Pacific Ocean, which is called El Nino. And last 2 years was La Nina. Last 2 years was La Nina. So during La Nina, generally the monsoon used to be very favorable. This time El Nino has emerged, and if you see that El Nino already started emerging, and many of the global weather forecasters, be it Japan, US, Australia, everyone is keeping a close watch on El Nino, and it is expected that because of El Nino, this time majority of weather forecasters expect that monsoon rain will be lesser. But Indian Meteorological Department, which is the government-owned weather forecaster, still maintains that monsoon rainfall will be just will be normal. Any rainfall between 96 to 104% of long-term average, it is termed as normal. And IMD expects for current monsoon, southwest monsoon, they are expecting that it will be around 96%, which falls under the normal category. IMD still expects a normal monsoon, whereas the majority of weather forecasters including Indian company is Skymet. They expect that monsoon rain to be lesser. And a lower monsoon rain will have, unlike 10-20 years back, now the generally this lower monsoon rain, it will have impact on the rural economy. Mostly it will have rural impact on rural economy as well as food inflation. But if you see the last many years, if you see that rural economy, the effect on rural economy due to poor rainfall is very limited now. Unlike 30 years, 40 years back, the impact is limited because rural economy now, other than agri, the other sources of income started emerging, and because of that, the impact, even if you have lower rainfall, it will have limited negative impact on economy. The second thing is that the non-discretionary spending is unlikely to get impacted because of poor monsoon, and only the discretionary rural spending may get affected if a monsoon is very bad. Discretionary spending means car sales in the rural area, and as well as tractor sales, which are discretionary spending, that may get affected. Whereas the non-discretionary spending like FMCG products, they are unlikely to get affected, at least in the current financial year, even if monsoon fails. That is what the studies shows. There is a sudden spot of bullish view on India. As I said, that Morgan Stanley released a very positive report 2 weeks back on India's last decade, as well as they're forecasting that next decade also will be good. Like that, many foreign institutions have released a lot of positive reports, and what they are telling is that India's long-term growth potential is very intact, and major institutions unlikely avoid India because we have a lot of democratic dividends, and also there is a huge growth scarce throughout the world, and even 6-7% growth in GDP is very positive, and many institutions, they cannot avoid India from investing because of the consistent growth potential we have. Indian market has gone up. Similarly, if you see that US market also has gone up, but there is a big difference between the nature of rally between Indian market and the US market. Indian market, it is very broad based, and a lot of stocks has participated in the rally. Whereas if you see in US market, the recent rally was extremely concentrated. Almost 5 stocks, that is Meta, Nvidia, which is the chip manufacturer, Microsoft, Apple, which has made recently a lifetime high just a few days back. Tesla, they have contributed majority of uptrend in S&P 500 in current rally. So this year, if you see that S&P 500 is up by nearly 12%, and if the above mentioned 5 stocks, if you remove, that is Meta, Nvidia, Microsoft, and Apple, Tesla, if you remove from that, means then S&P 500 would have gone up by just 3%. So the rally is extremely narrow, and most of the rally has happened in the artificial intelligence stocks. But we expect that the rally may broaden out in coming days. Already in the last 2-3 days, there was some mid and small cap rally was there in US. Russell 2000 has rallied in the last 2-3 days. And that is the difference. In India, the rally is mainly happening in mid and small cap, whereas in US, it has happened only in few large cap stocks. Equity inflow this month also lower. It is less than 5,000 crores. Just 3,240 crores has come. Historically, if you see that now what is happening is that whenever market is going up, the inflow is very less. Whereas when market falls very sharply, then inflow is going up. Inflow, there is a huge inflow coming in. In the month of January, February, and March, if you see that inflow is very more than 10,000 crores, where market did well. Whereas April and May, market was doing very well, and inflow is less. And we are getting almost 13,000, 14,000 crores worth of SIP contribution. That means net redemption happening in equity mutual funds, because SIP inflow is 14,700 crores last month, whereas the net inflow is 3,000, which means almost 11,000 crores of net outflow has happened in the equity funds, if you leave aside SIP contribution, mainly because of the market doing well. Suppose if there is some consolidation in the market, or if market sees some correction, means again the inflow will start picking up. So what investors should do in this? Our reading is that we are not expecting major fall in the market. Even if correction comes, it is going to be very narrow, and only it will last for short term only. Again, market will see bounce back, and market will cross previous lifetime high. That is what our reading is. And since many mid and small and micro cap stocks are going up very sharply, you do proper due diligence before buying, because when trend change, what used to happen is that stock price will fall very sharply, and again when market will go up, but at that time this some of the mid and small caps will not go up, and we may end with getting trapped. So stay invested. Don't feel that market has gone up, so we have to exit and stay away from the market. Even if you want to do that, keep 10 to 15% cash. Don't sell the entire portfolio, because we are not expecting the entire markets to see a major fall. And data to watch next week. US Fed outcome is there on June 15th. Right now, the expectation is that there will be a status quo in interest rate. That is, US Fed will not change any interest rates. Only next year, next month only, there is a possibility of 25 basis point hike. As of now, US Fed is expected to maintain the interest rates. Also, monsoon has to be closely watched. Almost it is 10 days past. The initial start is very weak because of one cyclone has formed, which has pulled most of the monsoon moisture, and the initial start is very weak, and we have to see how the monsoon pans out. So that is the presentation. Now we will see the recommendations. So this time we are recommending 5 stocks. Some of our picks are contrarian this time. So a mix of stocks which are doing well, as well as a contrarian pick I have given currently. The first one we are recommending is a Hindustan Aeronautics Limited, which has done very well in the last 6 months. It has done very well. In spite of that, we expect another 10% rally. It can happen in Hindustan Aeronautics. And by this month end, our Prime Minister is going to US, and it is expected that in this trip, one major agreement is going to be signed between the GE, that is General Electric, and Hindustan Aeronautics for transfer of jet manufacturing technology. And if that happens, it will be a long-term positive. Immediately, it is not going to show in the profitability of Hindustan Aeronautics, but it will be a long-term positive. But because of that, there is a stock may go up by another 10%. We are expecting it, and that is why we are recommending Hindustan Aeronautics. And defense is a theme which is doing very well, and we expect that another 2 weeks the momentum will continue in defense stock. When Modi makes a trip to US, we expect defense stocks to do well during that period. So that is why we are recommending Hindustan Aeronautics. The next stocks we are recommending is the RBL Bank. It's a small size bank. It's a very good takeover candidate. There is a possibility of some bank taking over it. The bank did very badly in the last 2 years, but in the last result, it was relatively good, and we expect that RBL Bank will do in coming quarters. The third stock which we are recommending is Crompton Consumer. It is a contrarian pick. It is one of the best managed companies. In this company, like ITC, there are no promoters. It is completely owned by public. Previously, one PE player was holding it. They have completely sold it out, and only institutions, mutual funds, as well as public are holding this stock. And it's a professionally managed company. Recently, it fell very sharply due to some headwind faced in the fan segment. Almost all companies which are manufacturing fans, like Crompton Consumer is the market leader in the fan segment. They have 27% of market share. The other companies are Orient Fan and some of the companies like Havels, Polycab, they are also manufacturing fans. Almost the entire category did very badly. One reason for that was that recently government came with a regulation that only the star-rated fans should be sold. Right now, only star-rated refrigerator and air conditioners can be sold. Similarly, they extended to fans also. Because of that, some destocking happened at destocking of inventory happened at dealer end level, which led to some adjustment in the sales. And because of that, results were not good. Q3 results were not good. Whereas for Crompton Consumer, Q4 did reasonably better because they adjusted all the inventories in Q3 itself. But other companies, they adjusted only in Q4. As well as there was a news that MD has resigned from that company. That is why the stock fell. But we feel that the company will do well. The valuations are very attractive. If you take the same type of companies like V-Guard and Orient Electric, they are trading at very high valuation when compared to Crompton Consumer. And we feel that valuation is reasonable and one can buy this. The fourth stock we are recommending is the Amar Raja batteries. It is also a contrarian buy. And if you see that the company which was once 7 years, 2015-16 time, it was trading around 30 PE. Now the valuation has come to just 10 to 12 PE. The valuation has come down. The company is generating almost 1,000 crores of cash flow every year. Now what they have planned is that the out of 1,000 crores cash flow, 400 crores will be used for lead acid battery, which is the traditional business. Another 400 crores will be used for this lithium ion batteries, for manufacture of lithium ion batteries, and balance 200 crores they will be give for as dividend. So that is what their management plan is. The market has there was a sharp contraction in PE ratio. The main reason is that market feels that the lead acid battery which are currently used, that may slowly die in coming years. Instead, lithium ion will come. But management expects it is unlikely to happen like that. Lead acid still will be there in spite of lithium ion coming in. For starting of cars, lithium ion battery for lead acid battery will be needed. So we feel that valuation is very attractive and the stock unlikely to fall very sharply. One major risk in the stock is the political issue is there. And the current government in the Andhra, they have some political vengeance on the company, and they have issued a factory closure more than 1 year back due to pollution, and company is fighting through legal. And because of that also, the valuation has come down. The last stock we recommend is JM Financial. It is also a contrarian play. It is trading below the book value. And if you see that, valuation is very attractive. As well as the company give good dividends. So basically, this month we have given a mix of contrarian stocks, contrarian picks, as well as the stocks which are having some fancy. Last time, if you see that Siemens unfortunately fell very sharply after our recommendations. Basically, the reason for that is that the parent decided to sell one portion of the business to its unlisted company, which is basically a related party transaction at a lower valuation than what market gives to Siemens. Siemens trade around 70 to 90 PE, whereas they sold that unit to at 20 PE, they have sold it. So because of that, the Siemens fell very sharply. Dalmia Bharat, which was doing very well, but yesterday it fell. One of the reasons for that is that they want 15% stake in IEX, Indian Energy Exchange. So last 2 days, we all know that IEX fell very sharply because of one regulatory action likely to come. And because of the fall in IEX, the Dalmia Bharat Cement also had some negative impact yesterday. But otherwise, valuation wise, it is very attractive and one can hold on the Dalmia Bharat. Sanofi, the target is achieved. Right now, we expect that after the recent rally, the stock is expected to be range bound. GSFC, as expected, the company has given very high dividend, almost 10 rupees dividend they have declared it. It will be a dividend yield stock in coming years. Walmart Lorry also has declared a decent dividend, and in coming years, it will be a dividend yield stock. So apart from Siemens, we are positive. Apart from Siemens and Sanofi, one can hold the other shares, Dalmia Bharat, GSFC, as well as Walmart Lorry. These shares you can hold. So that's it for it.